Hey, good afternoon, everybody. This is Dennis Wilburn with the Active Trend Traders. I want to welcome you to today's session of how to make money trading stocks, options, and ETFs. This is a free service I do offer from Active Trend Trading on a weekly basis. We cover what the market's doing, what a couple of stocks that we're specifically watching. Again, thank you for joining us either via Facebook and or on our Market Tech Talk YouTube channel. And do me a favor, if you like the content, please feel free to share it with friends. Again, this is free content. And also, when you're on the page, give us a thumbs up and say, hey, I like what you guys are doing. Keep up the good work. So we're going to slide right into the presentation for today. So hang on. Okay, as we said earlier, good afternoon. Welcome to How to Make Money Trading Stocks, Options, ETFs. I want to thank everybody for joining us today. We have a pretty good attendees, and then we get a whole bunch of people who join again on and take advantage of the recorded session. So I see a lot of familiar names there, and so let's get going into the session itself. Got some really good stuff to cover today. I want to remind you that all the materials we do present are for training purposes. Traders should always pay for trade any new method prior to the risk of their own personal capital. Past performance is not an indication or promise of future performance. Here's what traders want to do. We want to basically wait for the best opportunity. Had a really good discussion with one of our absolutely fantastic He's on the line, so I have to say all those nice things. No, he's a really good guy. Yesterday had a really good discussion about how to make, just making sure that we're locked into, taking the proper triggers and this type of stuff for trades. And it is all about waiting for the appropriate time frame. Here's what our objective is today. Typically, I want this session to last about 10 to 15 minutes. And so we're going to be very succinct. We're going to look at 5 different entities plus the 3 indexes. But I want to be providing timely, actionable intel. Now, I'm not going to be providing the same level of detail that I provide for the premium members to the Active Trend Trading service, but enough so that you can say, hey, I may want to, this is on my radar, so you may want to put it on your radar to look going forward. The question I have moving into this weekend is we're seeing a bounce on a lot of entities. However, is a rally into a bear market, bear trap, and will we see signs of a classical failure? If we look close enough, and we'll go into that just a little bit. Stocks ETF performances, how they're doing, and if we have any bonus setups, we'll talk about that briefly. Here's what we're doing with the Active Trend Trading System. I love this picture. It reminds me of what I used to do for a living a long time ago. And back when the airplanes had propellers and stuff. No, it wasn't that long ago. But I tell you, it's one heck of a wild ride. And whenever the market gets kind of crazy, I have to remind myself of where I was before. This was dangerous. Over here, trading and all that kind of stuff is, we don't want to be lose a lot, but we want to take calculated risk. And just like I took calculated risk when we were flying, it was always backed up with, plan B. What do you do if you get into trouble? That's exactly what we do with the Active Trend Trading system, is that it is a rules-based mechanical system. So here's what we're doing so far for the year. As you can see, we are starting to continue to catch up with what the indexes have been doing. They jumped right out of the gate and just took off like a scalded dog. And so let's take a look at what the indexes are doing. Let's see if we can see some of that. So you wonder what I'm looking at there. This is an IPO on, it's called Beyond Meats. and it's being tested Beyond Meats. It's a plant-based, I guess, vegetarian type meat substitute. Now, I'm not a big fan of that, but apparently this is getting a lot of attention by Horton's Restaurant. And so if you're familiar with Horton's Restaurant, that's a big deal. So SBY, there we go. So let's blow up the, we've been talking a lot about how we've got some cross current here, some cross, basically mixed signals. We've got TSI on the weekly chart crossing down to the downside. We've got TSI on the daily chart crossing up to the upside. And what is price action down? Now, our target, in order to, what I would consider a really nice, healthy pullback on the S&Ps and also all of the indexes, would basically take your low back the day after Christmas, 2018, extend your Fibonacci's up to the high that we just had 3 weeks ago, somewhere down in this area here. This is what we call the fib box. And a retracement, and this is what Charles Dowell noticed, that typically after a strong move in either directions, you will tend to get a pullback, and it's considered healthy, back into the 1/3 to 2/3 range. Little did Dow know that that corresponded to Fibonacci retracement. So some kind of a pullback back into here. This line that I projected down here, that is a 10% retracement of this gain. That would be considered just a healthy pullback and help. I think what it would do for us is it would help get rid of some of the loose, the weak hands out of the markets, and then give us something that we could then build on moving forward. So what are we looking at over here on the daily chart? Again, I've got my Fibonacci's in there. Now, oftentimes what we'll be looking at, and that's what I'm saying, is this rally. We rallied up off the 100-day moving average on the S&P, and so it has not taken out actually this past swing high right there, but it all came really close. We pushed on up, and so the question is this a rally to continue on and move higher, or is this a classical failure type rally where you push up towards the past high? However, there's not enough momentum and strong players to take it up through the past high, then we roll over and then fall back down. Remember, stock prices and index prices do not go up in a straight line, although if you look at from December of last year, sometimes you wonder if that's maybe a little bit of a fallacy. No, they do not go up in a straight line. They zigzag as they're going up. And so that may be what we're having here. We'll take a look. But for right now, throw a fib on top of this. There we go. From this high here down to this low here. And look what's happened is within the larger move, price actions moved almost to the penny up to the 618 retracement, and then have now reversed down off of that. But we can see what's happening. We're getting a slight tug of war between support at the 50-day moving average, which is this yellow dotted line, which is down at about $258. Sorry, $285, and also bouncing back up there. So we're in a tug of war. Is resistance going to win, or is support going to win? We'll have to, tune in next week, because we're not going to be able to see it. It's probably not going to give us any idea today exactly what's going to take place. Now, if we sell off into the close and price action is pushed back down below the 34 and maybe below the 20-period moving average, that could be an indication that, hey, weakness is going to come into the market next week. Remember, this is monthly option expiration week. which tends to have a slight bullish bias. Take a look at the NASDAQ Qs. And as you'll see with the Qs, we're getting a very similar type of reaction. I'll blow this up right here. I'm not going to go, we have mixed signals on the TSI on momentum. One of the things on the momentum, you may want to wait for the market forecast to get all the way down here below the 25 or below the 20, whatever line of demarcation you make for oversold. But as you can see, similar type situation. Price action moved up close to the 618 retracement. That's where the sellers came in and started selling things down. We bounced up above the 20 on the Qs today. Then sellers came in and started pushing prices down. Again, it is holding up nicely right there at this breakout level of 182.83. Break that. Yep, the 50-day may catch it, or it may just say, the heck with it, I'm going to blow on down. And then what we would have in a situation like that is we would have then a lower low in place, a lower high in place. And our anticipation with that is that we'd anticipate breaking on down and coming on down to the 174, 170 level. IWM. IWM has been the, no, not XBI, IWM. There we go. IWM has been, the Russell has been weaker than the other indexes. As you can see, the other indexes came up very close to last year's high. However, IWM just did not make it up that high. And so what are we getting? We're basically getting similar type situation. Blow this up to look on the daily chart. Let's blow this up. There we go. And as you can see, price action moved up. And because it's weaker, you would anticipate it to react at a lower level of the Fibonacci's. And sure enough, it reacted right off the 50% retracement, was turned over, rolled down from there. So as we look at IWM, as we look at the NASDAQ and also the S&P, it appears from what we're seeing right now that it may be setting up for a classical failure. Hence my comments from last week, is this a rally into a bear trap? Because oftentimes, there's several definitions of bear traps. Well, one of them, the definitions is you've been playing the pullbacks successfully all the way up from, a past low, but then bam, you play the next pullback, it fails, and so it's kind of a trap. It pulls you in and says, hey, the pullbacks have been working, and it's absolutely true. Pullbacks will, always work until they don't, and so that may be what's setting up here. So as of today, we finish up where we do. The IWM does in fact have a lower high. So how do we want to trade that then going forward? Well, it's closing below the 50. So any kind of a retracement back up into this area on that upper wick and then a breakdown down, that would be a trigger to get into the downside. And again, the strength of the weekly move is more apparent than the strength of the daily move. Now, could we, in fact, continue to slip down, retest this 152 to 151 level? You betcha, we could do that. And so that's where we want to be paying attention there. And looking for a momentum shift. So far, we haven't had a solid momentum shift, but just wait for the extremes in the indicators and the extensions away from the mean or the moving average, the 20-period moving average on the price action. So I want to show a couple of other. Here's a with the That's not what I want. Baidu. With the, there we go. The conflict with China on establishing some kind of a trade policy, as you can see, Baidu is really taking it. It's fallen like a you know, well, I won't tell you what it's fallen like, but those of you who've been around some of my presentations before, you know what it's an old country saying. But what's very interesting about this is this a capitulation move? You know, we don't know at this particular time. It could also just be a move down that reflects off of this, okay? We've got a longer term. We've got a nice flagpole coming down to here. Trying to get that flagpole in there. There we go. See if it'll take. There we go. There we go. Here we got a flagpole into there. And that did not take. And that flagpole is from $275 down to, let's say, down to there. And what you do is just basically take that, activate it. Let's move it over to where it broke off of this little flag here. And it'll give us an idea of where. There we go. How far potentially good price action on, and let's slide it in there. How far price action on Baidu could go. This is a measured move. And that's showing a potential downside target. Won't get there in one day on Baidu down here at about $45. And so we'll continue to watch that, but that's technically that's the expected move to the downside. What about I'll show you one more little target here. And so again, if by chance they get some kind of resolution to the China trade deal, we can anticipate a quick turnaround on stocks like Baidu. What's our buddy Baba doing? We just want to see Baba's. You know, if I were going to trade either one of these, because Baidu is just getting ripped. Baba tends to be a little bit more tame, if you will, and a little bit more control. So it is just now, it is breaking down below the 50-day moving average on a daily chart. And so it might very well provide a better opportunity to the downside, because you'd be catching it earlier in the downside, but as long on the slide. And so there's a couple that I've just been looking at. Again, Baidu is getting ripped more than Baba, and so that's what's going on with that. Here's a couple of stocks I'm looking forward to going into next week. Palo Alto Networks. Palo Alto Networks is looking actually, pretty good for. Get rid of some of these fibs here. Well, actually, take a real quick look. Fib, it came down, hit the 38% retracement, and then it is bouncing off of that. We've got earnings coming up on 5/29 after market, so we may be looking at somewhat sort of a pre-market or a pre-earnings run. Palo Alto Network to me becomes interesting at about the 224 to 222 or even 220 level. So there's a little $4 window where I'm interested in Palo Alto Networks. If we if we continue to move up, we're getting too close to resistance. And so I need some kind of an intraday pullback down into those levels. Again, I like somewhere between 220 and 224. Here is one of the stocks that had earnings this week that continues to do okay, and that's cyber. And as you can see, with the market weakness, look how great cyber has held up. As you can see, it's got, we basically broke out way down here and then starts to, push up. I've got a window here where it would be interesting, but right now it may just be, respecting the 34-day moving average, or at least the 8 and the 20. So that's where this would be interested to, for me, for a trade to the long side. It is holding up better than the overall market itself. And then NVDA that also reported earnings today or last night. And actually, it's hanging, but this is in a downtrend now. And so from a longer term, this is where a decision, you'll want to make a decision. Do I play off of this support that's right there and take a long side trade, but where do you take it to? Well, if you can get back up to the 20-day moving average, that would be good. That'd be about let's say 159 up to about 170. You may make it up to the upper Keltner channel, which would probably by that time would be down here about this level, 176 or so. Or what may happen, which I would be looking at this happening, is that it would hit the moving averages there and then give us a nice rollover, heading back down to the downside. What's the downside target on that? Well, we'd be down here about 150-ish would be our downside target, somewhere between 145 and 150. And last but not least, this is one that did really well in earnings last week, is Roku. And it also has been holding up just exceptionally well. I have put in a little zone between 77.57 and 74.35. That's where it's of interest to me. It did a small pullback, like just a couple of days. But price action is coming in. Sellers are coming in at the current level, so it's not viable right now. I want to catch it either off the 8 or down here towards the 20, which will both be up in that zone going into next week. So those are the entities that I'm looking at going into next week, guys. And I just hope that again, if you're a premium member, you will in fact get the triggers on those. If you want to learn how to become a premium member, we'll have a slide here shortly that'll show you how to do that. One of the compounding strategies that we're working on, and I'm going to be working with the premium members on this when I'm doing the strategy 2 strategies. I want you to be aware of one thing. It is also combined so that you can also trade a strategy 1 entity, strategy 1 trade off the triggers that I'm using for the strategy 2. We'll be talking about that next week. Here's where we're sitting as of today. We're up $816 for the week. Our target was 813. Our objective with this is to generate 5% utilizing options on a fixed amount, and we started with this account with $10,000 in it. And I want to see if I can compound at 5% weekly for a whole year. And if you're familiar with compounding, you'll know that that'll provide one heck of a return in over a 52-week period. Next week, my target 5% growth is $855. I'm up 71% for the year. Just real quick, taking a look at seasonality. Normally, NASDAQ will start to liven up and wake up between the middle of May into June. We'll see if we get on this new upward trajectory. I'm suspect about any seasonality for NASDAQ, the Russell and the S&P this year, simply because we've had such a strong first part of the year. Russell, again, here's where it sits. It kind of goes sideways from here to about October. Natural gas, nat gas, Also, probably a little bit of a spurt in gas over the next couple of weeks and then move sideways. Nat gas has not really been following the seasonality. Gold futures, gold, I could have extended this across the gold typically will start getting a bid sometime into July, into the mid-August time frame for the Indian wedding season, and press on up from there. And then crude. Crude oil has been following seasonality, and as you can see, in May, June timeframe, it tends to go a little bit sideways. Hey, if you're trying to just get an idea of what we offer with active trend trading, join us for our BAM meetings, and that's on June 1st. Will be the next one. It's a BAM webinar meeting. I'm going to be talking about the psychologies of a trader coming on June 1st. It's a Saturday. We get started right at 9 o'clock Pacific time, or if you're here in the islands, it's 6 o'clock in the morning. I know a few guys like Mark joins us from the islands, and so my kudos, Mark, because you're up nice and early. Here's a little bit overview about the team. I am so thankful that my published author, he actually just completed his first novel and has it on Amazon for purchase, and it's one of the top sellers in the area of Christian adventure books. It's kind of like C.S. Lewis or Tolkien type of book. Just finished that. He's joined us and working with me on the active trend trading and the market action points services. And there, of course, is my lovely bride, Michelle, and our Brandon, his wife, Sharon, and our 2 grandkids who were just with us a couple of weeks ago. And as I said, hey, Friday webinar special. This is good through May 31st, and then it goes away. And you can save 40% or more on the monthly membership, which is actually currently at $124.99. You can get it for $74.99, or save $175, get it by the quarter, and you just go to this website, password save, and that's all, and that is capital, our case sensitive. So that's where we'll end today. How do we do for time? I wanted to get my, I don't know if I can ever talk just only for 15 minutes. I don't know, guys. So, hey, keep the egg growing. I hope I gave you some good ideas. I will be putting out an email over the weekend that'll also show some additional ideas. And it comes out under the art and science of active trend trading. And of course, then the premium members get the more precise information going into the weekend. So I'll be back with the premium members for the final hour, and we'll get that going right at the top of the hour and just see what the end of day on Friday, May 17th, brings and offers us. So until later, aloha, trade well, and prosper. Have a great weekend. Mahalo, and God bless everybody. Hey, everybody, this is Dennis. I want to thank you very much for listening and watching our video today about how to trade less and profit more, eliminating variables that steal valuable time away from you. Just a real quick highlight. Please join us today as an active trend trader. If you don't want to go and research all this yourself, you can join active trend trading. Here's a discount amount, 40% discount on the monthly rate. You even save any more if you do it quarterly. Please just sign up with us, give us a try for a month, and see if you like us, and see if you don't benefit from being an active trend trader. Thank you.